I'm your host, C, here on another episode of Deep Dive. Today, I've got the privilege of having my buddy OJ on here. OJ and myself go way back. We had a chance to work with each other pretty much almost 5 years ago. So, this relationship is super important to me. But the exciting part about today is OJ is also going to be talking about his role as a loan officer and really what it takes really in 2025, but even in the future to be prepared to either purchase a home, but also the ups and downs of what it takes to be in the process of getting to home ownership. So I'm going to turn it over to OJ.
I appreciate it, Clarence. Yeah, man, it's been a beautiful journey. I know that I've seen you ride, and for me, beautiful journey on my end. It's been a pleasure meeting with you, man, and collaborating over the years. And I'm excited just to be here, man. I watched, your first and second podcast. Kudos to you for getting it started. That's half the battle. And let's rock and roll, man. Let's do this.
Awesome. Yeah, no. And today, we're going to be talking about a couple different topics. I have about four questions for OJ, and to give you all who are listening and watching some context, we're going to be asking about, what are some skills and mindsets to grow in your career as a loan officer, but also what's some advice someone needs to go into to break into real estate or the finance side? How do you get into the connections of becoming and getting involved? But also, we're going to ask him, if I'm a new homeowner, what should I be thinking of as far as coming to a loan officer? How can I better prepare myself? But also, could I use someone like OJ if I don't live in my current state? And then we're also going to just talk about where's the biggest opportunity for each generation. So when we're thinking of Gen Zs, or we're thinking of millennials, or we call them boomers, there's opportunity for everyone in this space. And the opportunity just becomes from asking the right questions and having more conversations. So today, our first question for you, OJ, is really centered about, where you grew up and how you got influenced with the mindset to get into real estate and sales.
Yeah, so I grew up in Dallas, Texas. You lived in Irving. I've pretty much been in Texas all my life. Did move to Houston for a small stint, about 2 years. And what really inspired me I got into sales before I got into real estate, but everything is sales essentially. So yeah, I got into sales. I remember I was just got out of high school. I started going to the community college nearby, and it's like, man, more school. Here we go, and ended up started applying at different places. I started to hit the job market. I started working at Verizon Wireless, and I told the guy, it's like, yo, man, you hire me here, or I'm gonna go hit the armed services and try and make something with my life. And they ended up giving me a role there in the like customer service area, like tech area, fix the phones and do this and that. This was way back in 2008 at this point.
Yeah.
And so that's what really jumpstart my career in sales. It's like, oh, it's you don't just get to fix phones. You have to sell this case to go with this phone, and you got to sell
Yeah.
this Bluetooth that is a Bluetooth mic,
That
like
Bluetooth, that
like
old school
the
Bluetooth,
old
boy.
school
That's taking
Bluetooth.
the thing. My uncle
That
comes to the
trucker's coming
cookout.
in, and you're gonna get the headset. And the higher the accessory was, the better. So I just realized real quick, it's have fun, enjoy people, enjoy those conversations, and sell. So, if you work for a company, you're probably going to have to sell what that company offers in some capacity, right? No matter what role you're in. So,
Yeah.
that's what really streamlined my role into sales, and through that, I was able to do different things. Sell within the SaaS and tech space, and then like work with you as a manager, where we were coaching and paying everything that we learned in sales forward to people that were just starting their careers, or people that
Yeah.
were looking to get into tech sales. So that's how my journey started. And then ultimately, my partner at the time worked real estate as a real estate agent, and she needed support when it comes to her Spanish speaking clients.
Wow.
So I took it upon myself. I really didn't know what a loan officer was, or what all that looked like. But I said, oh, well, I mean, I could do it. I'm happy to help. I speak
Yeah.
Spanish. I speak Spanglish,
Yeah.
and so I went ahead and took the course, and got it, ended up passing and got my certification. I could talk a little bit about what that looks like. And got into the game, and started
Yeah.
originating loans. And then the economy did what it did when COVID happened, and it was just like loan after loan after loan after loan.
Yeah.
And now it's a different world, and we can speak to that too. But that's a little bit about my journey,
Yeah.
how sales started, and what kind of cracked the code for getting into the real estate game for me, and what avenue I decided to pursue within that real estate market, and go from there.
Yeah, no, and I liked some of those topics you brought up, and that's a great segue into, at the time of 2020 to now, where would you say the real estate and loan officer space has really changed the most.
Yeah, so I know a lot of people they've gotten out of the game, either if they're a real estate agent or if they're a loan officer, if they're
Yeah.
originating loans. A lot of people stayed in, right? Because it's all about their decisions and how they operate on the day-to-day basis that's going to determine if they're going to be successful. But essentially, it's affected it in all kinds of ways that there's a magnitude I don't understand. To keep it simple, is essentially there's no more land that's ever going to be built, right? So it's either
Yeah.
you got to get your chunk if you're going to want it. If not, then you can live by different means, right? So it's all determined of like your mindset of what you want to do, and then you'll go from there. But that's the best way I can probably say. It's like, it did change, and there's factors, and there's going to be more factors that's going to continue changing, and it's just
Okay.
decide how you want to navigate that change for yourself and what your goals and what your family's goals and what opportunities look like for you.
Okay. And just as an example, what are some of the goals you hear as a loan officer for people now, that are looking to purchase a home?
Yeah, so the goals out here now, I'm 35 years old now. Some of my friends are around that age, and now they're getting out of the apartments, and
Yeah.
people have been doing this before. Not to
Yeah.
say 35 is the right home buying age, right? But they're
Yeah.
get, you know they're well established in
All.
their careers.
Yeah.
Well established in their careers. They've been in their roles for long enough. They finally decided to say, hey, I don't want, I want a bigger space for me. I don't want to pay someone else's
Or
rent.
growing
You
family.
know, or family, stuff like that. And so essentially now, a lot of just friends and people that over time, they decided to make that leap forward. And you being in the business for so long, just a natural progression of like, oh, it's gonna come to you. Everything can come to you with time and with continued effort and the same thing and different stuff like that. So, they're just in a better place on where they want to be mentally and for their families. Luckily, I'm in a position to help and educate them and guide them in that process. And then I have, realtor partners that essentially show them the beautiful homes and do all the negotiations behind the scenes. And then, the loan officers just in the back, just ensuring that, hey, they have the income. Hey, they've been pre-approved in a verified way. And this is a possibility for them to have that home. So really, it's just inspiring that belief in the people that do want to get a home is one of the biggest things I would say, because a lot of people think it's really tough. But at the end of the day, it's really not that tough. And just having a quick conversation with someone that's going to help you believe and someone that wants this just as much as you want it for you helps ease and gives you that confidence to move forward.
Okay. Yeah, no, thank you. That's super helpful. And I think as people are thinking of, steps they need to take to get into either real estate or being a loan officer or purchasing their first home or even refinancing, like what are some things that I can be prepared for? And I think you just said it, having a plan first and making sure you're organized around what you want to see for yourself, whether it's individually and you're like, hey, I want to move out of the apartment or townhouse, or if it's just like, hey, I have a growing family, things are changing, and I'm looking to move into a different direction. And I appreciate that context. And now, I want to kind of go into another topic around, some common questions. And that's, what do you need before you meet a loan officer? And some of these questions are, how much would I need for a down payment? And I'm just curious, when someone's looking for, we'll just say $1,000 home for an example, what, as a loan officer, what is the down payment that they would need?
Yeah, so I don't have my LOS system right in front of me, but doing some mental math, someone's looking at traditionally a lot of people think 20% is something that they need to put down. That's a false narrative. You don't have to. It's going to get you a better rate. It's going to get you a better loan program potentially, right? But ultimately, you can get a home nowadays with little as 1%. Like I originate in Texas, and there's programs and grants and stuff like that that enable those types of opportunities. So 1%, to answer your question, what's 1% of 300,000, right? $3,000, right? Sure, there's going to be closing costs,
Yeah.
there's going to be different things like that. So it is going to amount to more than that. But just, knowing that there's a program there and being in a state and talking to a loan officer, it's like, hey, what kind of grants, what kind of loan programs? I'm a first time home buyer. Like, can you to walk me through the products that because some loan officers are going to be more knowledgeable than others.
Yeah.
And then, but traditionally, if you're looking at a conventional loan, which isn't going to have, an additional mortgage insurance like compared to an FHA loan, you're looking at 3%.
Okay.
Uh, which should be around $9,000 if my memory serves me correctly on a
Yeah.
$300,000 home. And then from there, if you do a FHA loan, right, the minimum is 3.5%, so just a tad bit over, right? So
Yeah.
Getting into the home is definitely attainable in that regard. Start with your savings, right? That's number one. You gotta understand your finances really, and no one's gonna help you understand your finances but you, unless you want to pay somebody to do it, right? But if the long-term thing for you to do is save, like why wouldn't you try and learn this for yourself? Because this is like learning cash flow and learning like how much you're making. I mean, that's two different things in
Yeah.
itself, right? So really understanding your finances and having a discussion with somebody who's like just going to give you information or you research it online
Mm,
is super helpful in helping you like prepare like, okay, well, this is what I'm actually making a month and this is what I'm actually spending a month, and
yeah.
hey, this is actually a green light or a red light for me, like I need to evaluate. So a little self-reflection whenever you get to the point where you think you're ready, it's like, well, let me just take a look at like what I'm earning and like let's see what I'm spending and see if any changes need to happen.
No, that's super helpful. And, that leads me into my next question. Now I've got my savings and I'm ready to come to you. Like I'm thinking of myself, I purchased a home back in March of this year. And as I'm thinking of my home that I purchased back in March, I got my interest rate at about 6%. And as I'm thinking of a 6% interest rate, what would you say to someone who's ready to buy, has the savings, but they're a little afraid of that interest rate right now?
Yeah. So somebody that, what would I say to somebody like that? I'd really outweigh the pros and the cons. It's like, okay, yeah, interest rates are what they are. I mean, those are the facts. Numbers don't lie. I mean, it just is what it is. But where are you at in your life, right? Because that interest rate is going to, one, yeah, a lot of your monthly mortgage, it doesn't go to principal, it goes to your interest, right? So it's a huge factor. But like a lot of other things that maybe go into that monthly mortgage payment, right, is going to be like your property taxes, like where you're buying this home. And, if it's an expensive area, they may have high taxes, and those taxes need to get paid like within your monthly mortgage, right? Let's just say like it's in an area where it's a high risk flood zone or whatever the case may be. Like you got to have insurance to cover the purchase that you're about to make, right? So there's those aspects like the property taxes and then the home insurance that gets lump summed into your monthly payment. But
Yeah.
ultimately, if you're at a point where you need that space for your family, like the whole job for me as a loan officer is to, or a mortgage broker, is to really just make sure that you can comfortably afford this within the guidelines of what society says to make this happen, right? So that number could be at 5%, 6%, 7%. I've seen loans at 10%. Like you can do it. Like it just depends on where you're at, right? And it's always the fear of the unknown. Hey, 6%, like that's good in my opinion.
It is.
Traditionally over the years, the industry average, I believe, is closer to 7, right? We were just blessed recently to get to see a part in the US life cycle where rates got down to 2 and 3%, right? Like that was a blessing in disguise. Nobody saw it now. Everybody was just go, go, go on what was happening. But if you look and reflect, I mean, a lot of things had to fall into place to make this happen, right? To make that whole pandemic happen, to make this whole house boom bust. And it was a huge
Yeah.
transfer of wealth and huge transfer of opportunity. And it's the people that were ready to go that were able to make it happen, and the people that aren't, they saw that opportunity and now they're able to plan for it a little bit more. But interest rate 6%, like you never know what could happen in these next couple of years. We may see maybe blessed to see another time of lower interest rates, and at that point you definitely want to speak to a loan officer and see if you can get maybe a little cash out of your home or just refinance to a lower rate and just go from there. Yeah, I mean that's the biggest thing that I can say when it comes to that and interest rates.
Yeah, no, that's super helpful. I mean, myself, I left interest rate of 2.95, so I would share with anybody who is looking to purchase a home, the opportunity to leave an interest rate behind. OJ's point, you can go in and refinance down the road if you're going to stay in that next home or purchase it for even commercial business, right? If you're looking to purchase a home for rental properties, that's also something that where you have to put the 20% down, if I'm correct, right, OJ? Okay, so to your point, whenever I'm thinking of leaving the 2.95, it is definitely something that you look at and reflect, but the opportunity down the road, to OJ's point, to say, okay, hey, there's some things that are not always going to change. And when we think back to different eras of the 80s and the 90s when interest rates were anywhere between 15 to 14 to 12%. So it's like all these different double digits. We aren't there and I won't see that hopefully anytime soon. Knock on wood. So the balance of seeing that, okay, hey, here's a chance to actually take the leap. That leads me into my next question. Okay, I'm ready to go. So now, what's the difference between pre-approval and pre-qualification? OJ, can you kind of break that down? Because I think there's sometimes that people are like, I'm pre-qualified, but I'm not pre-approved.
Yeah, yeah. Well, that's where, it kind of brings it back to the top where it's like there's different loan officers and the way they use their words and the way their workflows go. Like everybody's different, right? So like number one, if you talk to somebody and you're about to start buying something, right? Especially at home, I would definitely recommend talking to multiple individuals, right? They're all going to have different things and they're going to call their pre-qualification letter like, their source of truth, or they're going to call their pre-approval their source of truth, right? But essentially what we need is a few things, right? We need to verify your income, right? We got to verify your debt to income ratio. We need to verify that, you're like with after verifying those two things, once we see how much like a mortgage is with home insurance, with the property taxes, we add that into your debt to income ratio and we ensure that doesn't hit a certain number depending on the loan product, right?
Hmm.
And so from there, we would need to make sure that you have money to put down on this down payment,
Yeah,
right? So just to make sure, like, hey, you're at the cash to close, like, do you have the cash to close? Because if not, you just went through a whole process of checking the home, making sure it's the right one. So,
yeah,
the whole job really, there's the last two things, right? It's a total of six things, right? Is going to be, we got to do that credit report. It's going to be, in most cases, yeah, we'll do that credit report. And there are loan programs that go as low as 580 to get you approved. And there's also loan programs that don't even look at your credit. They only look at income. So there's all kinds of solutions. But and then the last thing is, once you do find your property, is, we're getting that address and getting those property taxes and everything specific to the address. We make it all, put it all together, make sure the finances work. And then, whether the interest is at 3 or the interest at 6 or it's at 7, we make it sure it works for you. We present those numbers like, hey, are you comfortable purchasing a home, living at this home that you like at
yeah,
this price?
yeah.
And ultimately that's where the decision comes to play, because you could always get scared away by interest is this, interest is that. But whenever you sit down with, an educated loan officer or mortgage broker and they give you the numbers and like here, like, here goes these apples and here goes these apples, like which one would you like to eat right now? And they'll be like, oh man, this is that digestible number for me. And like here I was thinking about rates, but I love the home and this is the number that I was looking for anyways. Like if those two things are true, like let's move forward. And me knocking out those six things that I just went through is going to help provide confidence in you, confidence in the people that are selling the home to you, that this can all happen seamlessly and quickly.
Okay.
Those are the main things that people that are going to be looked at. And having one person look at it, it's like that's a leap of faith.
Yeah.
And it's like, okay, this person, like I barely met them or I was referred to them or whatever the case may be. Like, why not go somewhere else, right? Because there's somebody like me who's been in the game for a little over 5 years and, I'm still learning. But then there's also somebody that you just filled out an online form working for a big retail loan company, like the Zillows and the Redfins and the
Yeah.
realtor.coms of the world. And you go there and maybe they're just starting and they're just like, well, yeah, you're pre-qualified. Yeah, everything kind of looks good. And for me, it's more of like, hey, well, let's deep dive this because, my reputation with you, my reputation with, I'm not behind a computer or a big company. Like I am the company, right? And it's like, hey, my reputation with you, my reputation with the realtor, my reputation with the appraiser, my reputation with the title company, my reputation with the seller, my reputation with everybody is on the line. So ultimately, shop around and
Yeah.
look for different people. And the people that help you believe and make you feel comfortable that's probably for a good reason. They're good at what they're doing. They're well versed and they're actually ready to serve you.
Yeah, no, that's super helpful, and that kind of goes into my last question, just as I'm thinking of how we can tie everything that you just gave us really great feedback and just really good context to what people can do, what pre-qualified means, what pre-approval means, but also depending on where you live at by state and city, that can also determine what is pre-qualified and what's pre-approval. So the next question I'm thinking of is, we finally wrapped up. We've got the savings, we've got the credit score, we've got the pre-approval, we've got the qualifications, we've got the documentation we need to get started. But now I want to know, as my last question, what's the type of loan that's right for me? I know there's the FHA, the conventional VA, and a couple other different products, but if I'm a certain kind of individual, could you just kind of give me, a quick high level overview of, like, if I were ready to go, what kind of loan is right for me?
So, again, it's gonna, taking a look at your full financial picture is gonna help answer that question. But to keep it generic, right? If you're looking for a little bit more lax guidelines, right? A little bit less in depth, maybe underwriting and stuff like that. And you're in a well position where you have reserves where that's kind of where you're able to pay for a couple months, if something were to happen. A lot of people like the idea of a conventional loan, right? It's more of a premium loan. It has a lower debt to income ratio. It's like you're well established and you've been preparing for this, and they'll go for that. And the main reason they go for that is because there's not an additional mortgage insurance premium that's involved with the process, right? So that mortgage insurance premium is involved in an FHA loan. So it's an additional cost that gets embedded into, your monthly mortgage and all these different things, right? So that would be the two different things. But it's interesting because with an FHA loan and a conventional loan, whenever you run the scenario, you're going to see that the conventional loan has a higher interest rate and the FHA loan is going to have a lower one. But what's the interesting part, right, is the fact that like what I just mentioned, like there's something else baked in to your monthly mortgage, and it's that mortgage insurance premium, right, to back that federally backed loan, which is the FHA loan. And so, sure, you have a little bit lower interest rate, but remember they're popping an additional fee in there into your mortgage and into that monthly payment. So, if you look at it and you're like, oh, well, I'm gonna go with this lower rate, you may be paying more just because of that additional mortgage insurance premium. But if you go conventional, and they know that you're a little bit more of a well qualified buyer because your debt to income ratio is lower. Like, so also one more thing, FHA, you're usually able to get qualified for a little bit more of a home, right? So it just
Yeah.
really depends, right? So where how much you want this home to be, and then does it fit within there? And then again, does that monthly payment, like at the end of the day, the goal is to make sure that the buyer is going to be comfortable with the monthly payment no matter what happens. And so that's
Okay.
the goal for me to help establish the families and the individuals that are looking to purchase the home.
Yeah, no, that's super helpful because that's kind of what, most people are going to be asking, as soon as they sit down and get everything together, there's that opportunity to understand, what loan is best for me and what makes the most sense. And then, as I'm thinking, as we're going into the final thoughts, for some advice for someone who's trying to get into the loan officer, or even just go find out if they're pre-approved or pre-qualified or ready to purchase, what's some advice that you would leave with them?
Some advice to help them. So let's take the questions one at a time, right? So somebody, I think the first one was like, what would I tell somebody that wants to get into real estate, right?
Yeah.
So the first one on that, like the advice that I would say is, the neat thing is real estate is an opportunity to help you build wealth, right? You can get rich at any job, right? But ultimately you can get wealthy and, do all the things and get all the freedom and, create the processes yourself with your work ethic and with your relationships and all those different things. So like it's a challenge and it's a grind. And that's why I mentioned earlier, a lot of people got out, a lot of people stayed in, right? But there's a lot of creative ways, and especially with, social media nowadays, like there's a lot of ways to be successful. So, the advice I would take is like if you have a job, right, and you want to start with a side hustle, like real estate is one of the greatest things that you could do because you could work your 9 to 5 Monday through Friday, go show homes on the weekend, one, two or three of those hit, whether you're on the like on the loan and a loan origination side on the real estate side, like, that's supplemental income that's going to help you get, far. It's going to help you pay off debt. It's going to help you get that next thing, take that family on a vacation. So that's like the number one thing I would say. It's like if you're looking for a side gig, like start there, right? That's what I did. I started as a side gig for me.
If I'm looking to meet with the loan officer, what would be some advice that you would give that person that's meeting with the loan officer for the first time?
Some advice that I would say is, is just don't be afraid to make that phone call. Don't be afraid to fill out that form, and don't be afraid to process, like appreciate your own processing time. You can meet with me and I'm going to tell you all the things in the world and I'm going to give you all the belief in the world on how we can make this happen, right? Because I ultimately believe and want that for you because you came to me to figure out a way to make it happen. And whether that process is right now, you're ready, or that process is 6 months down the road, like I want to continue those conversations. So like first off is just like have that conversation, right? And you can have it with somebody who's new to the industry and they say, "Hey, like I think you can do it," and that should be enough of a cookie crumb if you really want it to like, all right, cool. Well, like let me double down and double check with someone else. Or it's like let me double down and like, okay, let me understand my finances. That is a good idea to get started, right? And just different things like that. So it's really just, you don't have to. So there's two ways, right? We can think about this, but I'm really thinking about, helping people that are just getting started and, really haven't thought through the process as much as I have. So I'm gonna try and put myself into that mindset. With that conversation, you'll come to your own understanding. And once you become to that own understanding, have your own amount of processing time and collaboration time with you and your family and your friends that have purchased and talk about their experience. And then from there, you'll have a second round of questions for that same loan officer or mortgage broker, or, or just questions that you come up with yourself, right? And so that's the neat thing of the evolution of everything, right? You
Yeah.
start wanting something, it's going to start, questions are going to start coming to you, right? Because you're thinking about it more. So just start with a conversation. Don't even worry about trying to get pre-approved. If you think you may not be ready, it's okay. Just have the conversation, and then you have the conversation. It's like, oh man, I think I am ready.
Yeah.
Go through the app. You can go through an entire app. You can pull your own credit report for free, stuff like that. There's options out there. We can do loan scenarios based off like like what you see on your credit karmas and the Experian apps and stuff like that. And we can run just a basic scenario. I mean, well, it's going to get a lot more detailed when you get further along in the process, but just to give you a general idea, we can use those scores as like, hey, if your credit's at this one, like this is what your offers are going to be. Your credit's here, this is what those offers are going to be. So like just have fun with it. It's a cool, fun process. It's stressful on the originator because again, a lot is on the line,
Yeah.
but ultimately like it's a fun, and seeing the people close is just a great feeling, right? So I want that for everybody, whether it's their first home, second home, investment property, whatever the case may be. It's fun to be able to serve people in that capacity.
Coming pre-prepared with your finances. Don't be afraid to make the call. You can pull your own credit score. 580 and up is really what's going to get you there. But being prepared, whether it's from having your savings prepared, but also understanding the interest rate of what you're going to be getting involved in, depending on the state and city. And then using someone like OJ, you can give him a call, as OJ is somebody who's a loan officer who can help support around the United States. So if anyone's looking for that support, someone like OJ is great to reach out to, not only for questions, but for that pre-approval and that loan process. And as we wrap up this segment, and again, OJ, thank you so much for really explaining and breaking down, your background, but also the storyline of what it takes to be a loan officer, and also the things as you're meeting with a loan officer in 2025, how to be prepared and how to really set yourself up to have either a financial freedom from owning multiple real estate properties, from commercial real estate and rental properties that way, to moving into a new home with your family, or moving out of a home from apartment apartments. That's really whatever you want to turn it into. Real estate is the key to success and wealth whenever it comes to really understanding how you can grow your portfolio, and really using a loan officer and understanding what they do is a great place to start. And as we're wrapping up, OJ, I just want to know from you, what's next steps for you personally and professionally?
Yeah, so next steps for me really are they're already in motion, right? There's different avenues when it comes to ways you can originate loans, right? But to become a loan officer, what you're going to do is you get into, something that, it's a 3 to 6 month process. You get certified, you submit fingerprints, all these different things. You get licensed as a loan officer and you're able to originate loans. So like that's step one, right? And then two, once you have that license, you have to decide like, okay, I need to learn and I need to go grow and I need to figure out these processes. So you got to go and hang that license with us with a broker. I'm talking about the broker world right now. So you got to go and hang that license somewhere, right? Somebody has to say, you know what, this person, I'm gonna sponsor their license and I'm going to help them and I'm gonna help monitor and coach and make sure they're doing everything's the right ways, and everything, right? So there's like you're a loan originator, and then you're like you own your own brokerage where you start sponsoring licenses, right? And helping individuals. So for me, and at my point in my career, I'm no longer just producing on my own. I still produce,
Yeah.
but now I'm a broker owner, which is local RSM, which is local real simple mortgages. And I only originate in the state of Texas right now. So what I'm doing is I'm building that playbook, right? I'm building that foundation that's going to help, be successful in ways that, I haven't been. I'm really doubling down on the fact, despite the market, despite the rates, I'm doubling down on my efforts to
Hmm.
learn more about the loan programs, learn more about how I can support realtors, learn more about how I can use social media, learn more about how I can, be a resource to clients. So right now, I'm really just doubling down on myself so
Yeah.
that, the next person that comes in or the next person that believes in themselves or wants to go this avenue, like they're going to have a playbook that a lot of people don't have, right? And it's,
Yeah.
they're just going after like who's going to pay me the most per loan and this and that. Like, one, I'm going to do both, right? I'm going to have a foundation for you to be successful. And I'm going to probably be one of the more of the competitive paying like brokerages that you can grow and learn from, right? So that's like the next step is here, right? The journey is now, and the journey is every day. The journey, like this is the weekend, like post this, like I'm gonna go to a buddy and he has an open house, and I'm just gonna stand there with him and be like, yo, hey, I'm ready to help you get pre-approved, right? And it's like being at the right place at the right time is half the
Yeah.
battle of any sale, right? So if there's
100%.
people looking, go where the people are looking at, right? And that's like open
Yeah.
houses and that's, the different things like that. So, having that playbook, putting it into place and really explaining more so my role of where I'm at now, just so you know, like again, it's more so like I serve Texas and I can only serve Texas, only have to get my
Okay.
brokerage licensed in other states. Like anybody in the United States, like feel free to, contact me. Like, I'm sure Clarence share my information, go to my website, all the different things. And I'm happy to have these conversations. If you move to Texas, great. We'll make it happen here. But if not, that's totally cool. You and I have a conversation. I help you feel more comfortable. I did my good deed for today. And that's what fills my cup.
Awesome, man. OJ, I appreciate all that, man. And again, I know you're going to be super successful putting those feet to the pavement. You already always been a grinder, man. Always been a top producer. Always been focused on helping others, man. So I appreciate you coming in today, really just giving us some highlights of where things are at in the real estate market. But the best partnership is with the loan officer and the real estate partnership to ensure whether you're in the business or even just residential side of purchasing your home, knowing what you need to get for moving forward on your goals is really starting with that loan officer. And as we're wrapping up and going on the move on to the next episode, again, as OJ said, hit him up. But if you found today's episode valuable, make sure you like and subscribe and share with other people. And again, hit us up if you have any other questions. We'll catch you on the next one.